Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and a lot has changed. We've got a lot of closes from Friday that we need to examine. We've got the cryptocurrency market crashing, Bitcoin crashing, alts getting obliterated. We have got gold and silver looking like they want new highs in the not too distant future. Equity markets have given up nearly all of their bounce in a single day. Oil is above $120 a barrel. There's a lot going on. Look at this dollar chart. The dollar looks like it wants a new high. We've got an awful lot to cover. So first of all, why is this going on? Well, this is going on because we had a hotter than expected inflation reading. Okay, so go back and watch the previous videos. I've been going on about inflation non-stop. I'm not gonna read all of these. Gas 44% since last year. Airline tickets 33%. I'm not gonna read them all. I'm just gonna slowly move my cursor down, and you can check out these numbers. But one thing you'll notice is how on earth do those numbers only add up to 8.6%? I don't know. Well, I do know. It's because the CPI number is a CP lie. Anyway, we're going to do a deep dive technical analysis today, and I've got a lot to cover, so I'm going to try to breeze through a couple of these charts real quick, and then we're going to dive in and do some technical analysis. The major point and the take home I want to make today is that we really need to start respecting that a lot of downside could be on the cards. And I'm not trying to predict it. I'm not trying to predict anything. But what I am saying is we are getting close to having to draw some lines in the sand and say big drops are actually starting to open up now. The possibility of serious downside is becoming more and more likely. So Twitter is absolutely bombarded with stuff like this at the moment. Altcoins, lowest weekly RSI reading ever, even below the 2018 bear market. And this is just data. I'm not saying this is of course true. I mean, here it is. You can see for yourself, right? We've got charts like this, where every time one of these setups showed up, it led to enormous upside for Bitcoin. And we've just had it here. More stuff like this from T-Analyst amongst a bunch of other people. You know, here's a buy signal, here was a sell signal, here's a buy signal, here was a sell, and now here we are in a buy signal again. Okay? But the reason I'm quickly breezing through these is because whilst this is just data, and whilst it does show that yes, historically these were a buy signal, the thing that these charts admit is that we could easily go a lot lower before we actually round and find a bottom. And this is true of all of these. Okay, if we V up from here, sure, we could start a bull market. But what if we have to chop around sideways and bleed slowly lower for a few months first? Okay, are you prepared for that? Because if you're not, then it's time to get prepared. Again, you know, is this going to V up? Or look what happened here. When we entered this, we trended lower for a while. Okay, so we could easily do the same down here. The same is true for the first time. We didn't just enter this green, you know, we didn't just cross this line and recover straight away. We might need to take some more time to get out of here. So let's dive into some charts. I want to start with this one. And ETH, this is Ethereum against the dollar. This is a 1 week chart, okay? This is a weekly chart. You can see that ETH is crossing this line in the sand. It's already significantly below this level, and we're going to get into the normal chart in a second. So here's another chart. Shout out Elliot Chad, by the way. You can see this is ETH against Bitcoin. ETH priced in Bitcoin. This is suggesting, look at this chart. Where is the support? When you look left, where is the support? Okay. So could we bounce off of this? Yeah, absolutely. Absolutely, we could fall all the way down here. Everything is on the cards at the moment. So make sure you're subscribed. Hit the like button. Let's get a big session going today. And we're going to start off with the dollar. The dollar. Okay, we need to zoom out a bit first. Get some context. The dollar has made these highs. We drew a trend line across. We broke out, came back down below, looked to use this as resistance, and then we got a hot inflation print. What happened when we got the hot inflation print? The dollar was, of course, bid. Okay? So if you've been watching the prior videos, then you'll know down in this neighborhood, I said that we probably needed to come up and make what would be either a lower high, an equal high, or a higher high. So I didn't know which one of those three, but I didn't think that we were just going to break straight down from here. Okay, so the first portion of this is kind of checked. I like this. But let's face it, my preferred look, as I said in the prior videos, would have been that we make a lower high here before we can break down. However, based on this kind of tells me that we're going to make a higher high here. This is too much of a big bid. This, of course, could reverse on Monday, but there's no denying that the dollar is very, very strong right now. Okay, and so until this dollar can break down, then it's a risk-off environment. And this is why I'm saying that we really need to start paying attention and building awareness. Off the back of the inflation story, certain things make sense out here right now. This is gold. Gold makes sense, okay? Gold has broken out of this big wedge, this first wedge. It's come back down, it's trapped below, sprung above, and now we're forming another wedge. It looks like gold is doing what I thought it would be doing, okay? I said, best case scenario, we come up, maybe test this, we come down, and then we can break out. That's why I've had this sat here for weeks now. If you've been following the channel, you'll know what I'm talking about, okay? So this actually makes sense, right? The dollar makes sense, gold makes sense. The dollar is bid because everyone is selling stocks and risk assets for the dollar, and gold is bid because gold, there's an inflation story going on, isn't there? When you got high CPI numbers like this, higher than expected, when the real world numbers are like this, then of course gold is bid. So this is a good sign. This is a good sign for gold. It looks like we might have even taken some stops out on this wick, and now we're pushing up. So this is a good sign, and there's probably likely a big trade coming here. If we can do what I said we ought to do, which is to come up and touch this line, maybe get rejected off it initially and then break it, there's an enormous trade here which sets us up for a run to new highs. Silver, still holding on to this position. Again, looks like we might have taken some stops out. If gold's going to continue this strength, you'd absolutely expect silver to be making a move up as well. So I'm long and strong. I'm not going to go altering the position. And whilst I'm here, I want to talk about why I'm not going to alter the position, because I realize I say this all the time. I say I'm going to let my stop do the worrying, but I think I need to make it clear why I'm going to let my stop do the worrying. The reason is experience has taught me that you need to push your trades, okay? Now, each to their own, everyone's got their own strategy, blah, 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 blah. But for me, what I've learned is it's easy to look at this with hindsight and say, oh, well, maybe I should have taken profit here, right? Or maybe when we were up here, I shouldn't have got greedy aiming for up here. But if you get into the habit of risking this much, right, only to cut your trade short here, then when these big moves unfold, like for example here, you might have ducked out on the first red candle. Oh, it's volatile. Or here, oh, I'll just jump out here, and look what you miss. Okay, so you'd have risked this big amount, and then instead of reap the benefit of being able to ride this trend until here, where it would have been exhausted on a trend line breakdown, you would have been ducking yourself out, which means you're going to end up taking stops and then ruining your chance for profit. So I'm happy to take as many of these as I need, because I know that just one of these bigger moves, like this move here, was a very, very, very profitable trade for me, and I remember this one fondly. I remember taking a small amount of risk on this trade and then pushing it all the way up into this neighborhood, okay? And if I'd have ducked out at the first sign of volatility here, like we went up a bit, rejected, then kind of ground sideways, and it looked like we were going to go down. A lot of people here, oh, I'm out, this is too weak, okay? But you have to learn to push these trades. That is how you are able to extract money from the markets, okay? Not by getting involved here and second guess it. My thesis was, if we break out of this trend line, we should end up here or be stopped out. So that is still to unfold. And so this is why I'm not intervening here. This is why I'm letting my stop do the worrying. And if I get stopped out, it's fine, because I know that jumping out here, training bad habits to exit this trade early, or worse, down here where the price was yesterday, training bad habits like that is not good. The habits I want to train are the habits that are going to make me the most money, and they are pushing these trades for as much as I can possibly get out of them. Even here, this would be a good example. Let me just line this up. Let's say, hypothetically, something like this. I don't know, whatever it is. Okay, let's say this is the trade. So I enter here. Okay, we get the breakout retest and we go. Now, ride the trade, ride the trade, ride the trade. Then it comes all the way back in, and suddenly you went from being in profit up here to now you're not in profit anymore. Now you're in a slight loss. A lot of people would be panicking once they saw these big two candles down. A lot of people would be intervening with their position at this point. Okay, but as you can see, the correct thing to do was to do nothing and to let the stop do the worrying, so that you could squeeze and extract more money out of this market. Again, your target likely wouldn't have been here. Your target would have likely been here, okay? So again, you can take the money here on a trend line break, or you can continue to push this trade and push it and push it and push it until it can't be pushed anymore, okay? Until it's unreasonable, until you get clear signs of distribution, rejection, retest, rejection, and go down, okay? So the point I'm trying to make here is you mustn't get involved and change your thesis halfway through. Have a thesis, have a plan, and stick to it. With that said, same thing applies. Here's the stocks, the S&P 500, okay? So we had a bull flag and a bull flag breakdown. A lot of people would have been out of the trade at that point, and each to their own. We're long and strong at the moment, and there's nothing to say this isn't going to bounce on Monday. I'll admit it doesn't look likely. It doesn't feel likely right now. But if this turned around on Monday and continued higher, it wouldn't be the first time I've seen this sort of thing happen. Okay, so likely going to take a stop on this, but I'm not ducking out of this early for the same reasons, because I want to train the habits that allow me to buy the break and push the trade, buy the break and push the trade, buy the break and push the trade, not getting in the middle of all of this stuff and having a plan and then changing course. So of course the next logical question is, well, what happens if we do get stopped out? Well, if we do get stopped out, this opens up a world of downside, doesn't it? Where are the likely levels that we could stop? Okay, I would say if we lose those lows, if my position gets stopped out, this is an area where we would likely pause. And below that, I would say this is an area where we would likely pause, and then there's probably one more below that. Like this, okay? So there's another, I don't know, from the stop. There's another 15% on the table easy here, and it's likely going to be closer to 20, yeah, 18% from the close on Friday. So this is what I'm saying, where have a plan and stick to it, but we need to start to be open to more downside here, okay? This is not me turning bearish. I still, to this day, I don't know what the market is going to do. I never try to predict, but we have to be honest with ourselves and we have to be objective that the theory was we would break out and then move up at least to this line, okay? And then likely we would take that out and move up higher. The market is telling us that that is likely not going to happen now. So if that's likely not going to happen, what is? Well, more downside. This is what I mean. We just have to be open to that. Again, that's not saying we're going to flip short Monday morning straight away without questions asked. We didn't flip short Friday trying to second guess. But we know that it's time to start having a plan. I showed an Ethereum chart from Bob here. We have taken this out on the weekly. This was at 1679. So we are well below that 1679 being this level roughly here. Okay, so we are well below this level now. So again, with Ethereum, where does this open up? Well, it opens up really, this is just an air pocket, isn't it? There's a bit of congestion in here and from the prior high, so we can draw a box maybe like this. But realistically, if we start to take out this level, it's going to be a hot knife through butter all the way down to 800 and then possibly as low as 400. Now, I'm not calling for $400 Ethereum. That's not what I'm suggesting. But what I am suggesting is that if you are not a hodler, if you're not a long-term holder with conviction and are happy to sit through enormous drawdown, then it might be time to start planning ahead for these things. Okay? So there's absolutely nothing wrong if you don't mind. If you're just going to keep buying, keep dollar cost averaging every month and accumulate as much as you can, knowing that we are approaching this 4-year cycle low for Bitcoin at the end of this year, and that likely this is not the price necessarily, but this is the timing window. Sometime between, say, the end of September and the end of the year, we are going to form a big low here, and we could just chop sideways into that. We could bounce from here and drop into it, or we could just slow bleed all the way down to 400 or whatever for Ethereum. I don't know what the number is, but what I do know is we are going to form this timing-based cycle low at the end of this year. And if you're okay with holding this, I mean, especially if you bought up here, if you held from up here all the way down here, then what is an extra couple hundred amongst friends, right? But if you perhaps got in down here and you want to make sure you secure some profit, then it might be time to start considering other risk management strategies. So again, I'm not saying I know where this is going, but what I am saying is structurally, there's a lot of air pockets in support here. There's not a lot of congestion. So if we start to lose these levels, the next one should become pretty logical pretty fast, right? Zooming in a bit on Ethereum, we've also got some quite clear, how do we know if the trend has changed? How do we know if we're not going all the way down to these levels? Well, the first line to break is this one, which looks like it will converge with this one above. Get above here and we can start to make the case that perhaps we're going to have some bullishness to come. Okay, if we can get above here, then perhaps we can make the case that some even more bullishness is to come. I want to now change the tone slightly for Bitcoin. Okay, it's been quite bearish tones, hasn't it? Quite bearish, quite bearish. And again, I just want to reiterate that anything can happen, and I'm not trying to predict or anything. But if we look at this fractal here, okay, aren't we more or less still sideways? Yes, we have lost the green box that I drew on here quite crudely. Okay, but we have not taken out this low. It would be fairly easy to just draw a horizontal line there, clone it and move it to the top of this range, and here's our sideways box. And now if we look at our fractal, okay, we're right in this timing band, right in this middle of this 60-day consolidation window, where we've had this bull trap kind of. We didn't break out above this trend line, but we had two of these bull traps. Are we now going to get two bear traps like we did in this area? Is that what we're going to get? A double bottom form, some sort of violation wick? At the end of the day, this is still net sideways, okay? Now, we have to be open to the fact that it's starting to look like it wants down more than up. The trend is down primarily from here, okay? And we are now approaching the bottom of this sideways sort of consolidation zone. But very easily, this could, don't kid yourself, this can easily turn around and recover and break, okay? So this is not dead in the water just yet. And the point of this video is not to doom and gloom and scaremonger. The point of this video is simply to say that we need to be open to the possibility. You need to have a plan that suits you. What are you going to do if we lose this level? Are you going to, on a closing basis, are you going to just hold? Are you going to keep buying more and you don't care and you'll wait for this 4-year cycle low to come wherever it comes and then go in bull market zone again? Or are you not able to sit through potentially a hot knife through butter again for Bitcoin? What if, and I'm not saying this will, this seems way too low, and if you've been watching the channel any length of time, I think people wanting this are dreaming. I don't think it goes this low, I really don't. But can you sit through a drop to these levels? Okay, the old 20k prior high, and what about this 14k congestion zone? Are you able to weather that for a few months? Are you able to sit through what could be quite a quick drop and a failed bounce followed by quite a quick drop? Are you able to sit through this? If you're already on the sidelines, then yes. If you just don't care about Bitcoin, you just want to accumulate it, then that's fine too. I'm not trying to tell you what strategy to have. I'm simply saying prepare for all outcomes so that you're able to deal with it, because the last thing you want to do is to watch this drop to 20k and then maybe 14k and sell your position at the bottom. That is the last thing you want to do. So make sure that you know ahead of time what your plan is for if these scenarios actually unfold. Okay, and there's nothing wrong if you're just going to say, I don't care, I'm just going to keep buying it every month, I get paid, I'm not even going to look at the price, I'm just going to accumulate as much Bitcoin as I can, I'm going to dollar cost average every month or every 2 weeks, and the price is the price, right? 1 Bitcoin is 1 Bitcoin. There's nothing wrong with that. The only thing that's really wrong here is when you get caught off guard. You wake up one day, oh, Bitcoin's at 20k. You wake up another, oh, Bitcoin's at 14k. Okay, oh, what am I going to do? Well, it must be dead, now I sell. And that's when you get wrecked. Bitcoin loves to extract maximum pain from its holders, from its market participants. So have a plan, stick to it. The bullish side here, of course, is what if we are about to do one of these scam bear traps? We've had the scam BART patterns to the upside, haven't we? We've had 2 of those. So what if we get 2 of those to the downside? And then a 60-day consolidation window. And all of this ends up being largely contained between these 2 blue lines. And what if we just get a sideways move into here and then some sort of relief rally? Okay, everything's on the table. And I mentioned right at the start of the video that gold and silver are making sense. There's an inflation story here. The inflation's running hot. It makes sense that people are buying gold and buying silver to hedge inflation. Okay, that makes sense. It makes sense that during the inflation, people are they're worried about this. Why are they worried about this? People are having to take risk out of the equity markets because they think that with inflation running hot, the Fed is going to be forced to continue to raise rates, which is not accommodative. That's not accommodative to equities. Okay, so this kind of makes sense. Gold absolutely makes sense. Oil as well. This is an inflation trade, but oil being where oil is makes sense. Okay, oil, much like gold and silver, you are seeing inflation. This is why the trend is up. This is an inflationary chart, okay? This is what the gold and silver charts should look like, really. Let's be honest. And then going back to Bitcoin, of course, this is why Bitcoin doesn't make any sense whatsoever, okay? This is gold 2.0. This is a better inflation hedge over the long term than anything else on the planet. So where there is a disconnect from reality, like what we have right now with Bitcoin, Bitcoin is disconnected from reality because people are treating it like an equity market. This is not an equity market. This is a better inflation hedge than gold. And all you have to do is price any commodity in Bitcoin and then zoom out. So where there is that disconnect, there is maximum opportunity. People posting these enormously bullish charts are going to come right. But I do think that although we're only single-digit months away now from finding this cycle low, we have to be open to a couple of months of downside before we can actually find these lows. Okay, and the same with Ethereum. Like, Ethereum is probably going to do well because there's a lot of like backing behind it. JP Morgan, all of these, you know, hidden whales, whatever else. If you know, you know. If you don't, go and do some research. But Ethereum is definitely going to go higher over time. That's not really a question. The question is, how low does it go in the meantime? 400 seems out of the question to me. Okay, but markets, I can tell you this from being in the markets as long as I have been, markets can always go lower than anyone expects, and they can always go higher than anyone expects as well. Okay, numbers that seem unrealistic are achieved both to the up and to the downside. There's no doubt in my mind that zooming out over the decade, we are going to end up with a 6 and 7 and even 8-figure Bitcoin. There's no doubt in my mind people are going to be forced to adopt Bitcoin. The demand is going to come in screaming because what are your other options? Holding fiat? That doesn't make any sense at all. Holding fiat when they're going to keep giving you these 8.6, 9% number, whatever the number they give you, but everything else. I mean, if you live in the world and you buy petrol, you buy tickets, you buy food. If you buy any of this stuff, you're already noticing it. Okay? You're already noticing it. Everyone is noticing it, and it's going to only get worse. Okay? So if you're in Bitcoin now, you understand this. You understand that this is only going to get worse. You understand that Bitcoin cannot be inflated. It's the hardest form of money on the planet, and therefore you buy and accumulate Bitcoin. But right now, the majority of the world does not understand this. All they know is they're getting poorer, everything's going up around them, and they can't quite figure out why. But slowly but surely people will realize, oh, it's because I hold fiat currency which is continuously debased. And instead they should start to accumulate a currency that cannot be debased. Let me tell you, there's nothing like losing all of your wealth rather rapidly to force you to adopt a type of money that won't lose your wealth. Okay, so make no mistake, with a longer term view, we are going up. But in the short term, make sure you have a plan. Everyone has their own unique individual circumstances. Everyone has their own appetite to risk. Some people have no problem holding down to here. They'll just keep buying. They don't care. Okay, but if you're one of these people that was not considering these levels, then now is the time to start asking yourself, how would you feel if the price went down here? Would you be able to stomach it? Okay, so in summary, I am by no means bearish. Okay, I am in no way, shape or form bearish or bullish. I'm simply neutral. Okay, I just simply try to look at the chart in front of me and see what's going on. As I've shown you before, I have positions that are seemingly working out, and I have other positions that are seemingly not working out. But I'm not going to go interfering. I'm going to have my plan and stick to it, and that is what I've been encouraging from everyone today. Have a plan and stick to it. Whatever your plan is, have a plan and stick to it, okay? If you found value here today, I'd appreciate it if you could comment, subscribe, like, all of that good stuff. Follow me on Twitter. Remain pretty neutral going into Monday. A lot of games get played on a Monday, so I'm just going to be taking that as it comes, letting the dust settle a bit. The market needs a little bit more time, I think, to digest the CPI. It usually takes a couple of days before it's fully decided which direction it's going to go in. So maybe we get stopped out of some positions, maybe we don't. We'll see. But for now, make sure you're subscribed if you want to see how I deal with these positions in real time. Turn the notifications on, and then you won't ever miss anything when I post it. Until then, I really sincerely hope you enjoyed your weekend, and I hope you're doing well in life. Until next time, I'm your boy Camel. Take care. All the best. Bye.